The rumors you've heard about me are true. I've fallen in love with another company, a stock that I'm invested in fact. One that I haven't felt this strongly since I was investing in Tesla stock back in late 2018, early 2019. But unlike Tesla stock, it feels like no one's even talking about one of the fastest growing stocks that we have on the markets that even Warren Buffett himself is purchasing, something that never quite happened for Tesla. The company I'm speaking of is Nu Holdings, a Latin American digital bank that might have found the strongest product market fit that has ever existed. Remember, as we go through this presentation, this company is only 10 years old. Let's get started. Starting out, like I said, this company started back in 2013, but only actually selling their products by 2014, getting into the credit card business, just like the one that you're seeing on this screen, where the niche was to offer credit cards to people that have never had them before. Then they got into their new accounts or Nubank accounts, which is like a regular checking or savings product that allows you to do all sorts of things like earn interest, spend your money, send it to friends, pay your bills, etc. But as we go along, you can see that they've developed into so much more than that, doing very similarly to what SoFi does, getting into spending, saving, investing, protecting, and borrowing, right? Credit cards, debit cards, mobile payments, you can all see it down in the left-hand side, servicing markets like Brazil, Mexico, and Colombia. Now, very interesting. I just updated these numbers because this was a screenshot that was taken from a previous quarter. But as you can see, 80 million customers today with 3 million small businesses that they also service, getting into practically everything. Now, the growth has been absolutely exploding. Like I said, 80 million users and continuously putting out new products as we go along, offering practically everything, like I said, from, payroll deductible loans now, car insurance, collateralized credit card limits, all sorts of amazing things that add to the Nubank experience. But as we go along, you can see that that audience has been completely captured. Look, 46% of the available adult population in Brazil is now a client of Nubank's. Very small relationships in Mexico and Colombia because those were just introduced back in 2019 and 2020, but we are looking to capture a very similar market. And Brazil is also still growing at an amazing pace. Now, some people would say that that's actually, you're getting to a sort of a market saturation at this point where the growth is going to start slow down. That's not quite the case for Nubank, as they believe that the credit products, which actually make up for about 78% of their overall revenue, still is in the very beginning stages. They're entering a $1 trillion market just in Brazil, and as you can tell, the cards are their biggest, sort of category here, but still only being 11% of the cards. Once you actually get into, unsecured personal credit, secured personal credit, business credits, payments, investments, insurance, servicing fees, or marketplace, all these different categories have so much more total addressable to, break into. This was taken from a year ago. As you can see, total customers now, it says 33%. I think that's actually more like 46% for Brazil. Active customers is closer to about 40% or a little bit less than that. But like, for example, you see deposits down here for Mexico at 0%. This is now actually just being broken into. We should see the first percentages for Mexico just here in Q2 of 2023. All of these numbers will slowly fill out as we get into new business models. Like I said, payroll loans we just broke into. And so as this starts to fill out, the total addressable market is still absolutely there in Nubank's opinion. And these are just for these 3 businesses. They could totally get into Peru, Chile, Argentina, Venezuela, all these different other Latin American, countries. But even in the industries that they are in, they are top issuers across the board. This is the number one country or the number one business in these 3 countries. So it's doing phenomenally already. And the reason people love this business, they have 9 NPS scores, which is net promoter scores, sort of the satisfaction of their overall customer of over 90 plus points. Okay. You just don't see this here in America. Even in Latin America, as you compare it to their incumbents, they're about half of what, Nubank is doing, and you can see this in the other page right here, complaints per million. It's just not even close to the other incumbents. They have a quote here during their S1, 99% of calls received were answered in less than 45 seconds, and the customer satisfaction rate for the calls exceeded 92%. You just don't see this in banking. It's mind-blowing, honestly. Right now, they in just the 3 countries that they're actually looking into, they service around 60% of the Latin American GDP and population. Actually, that's not what they service. That's what the total addressable market or serviceable market is. But as you can tell from this slide over on the right, is that whenever they entered Brazil back in March of 2014, the growth for the first 26 months was quite slow. Then they got into Mexico and the growth has been much faster. And then Colombia has been even faster than this. So what they're showing here is that as they enter new markets, the growth should actually accelerate faster and faster because they're getting that sort of ability to make product market fit for those marketplaces extremely quickly. I also wanted to add this here as well. The percentage of unbanked individuals or people without credit cards, or just the population that likes to enter Nubank, is also the sort of people that are under 30. These are all very strong in these countries and even stronger in the ones that we're going to enter later on as well. But these are the 3 biggest marketplaces in Latin America. So of course they entered there first. This is where it gets good, ladies and gentlemen. 80 to 90% of Nubank's customers joined organically through unpaid referrals. Whenever you're looking at the strongest neobanks or digital wallets or anything along these lines, the cost to acquire is around $10 for Cash App. That is known as an unbelievable number. Whenever you're comparing it to SoFi, it's closer to $350, okay? Whenever you show it off as Nubank, only $2 is paid marketing, and cost to acquire a normal customer is about $6.50. This is unheard of. It's actually a world's best in terms of what ARK Invest could find during their studies for digital wallets and neo banks, that Nubank had by far the best numbers worldwide, okay? Cost serve is 85% lower than incumbents. So although we're acquiring customers, even the cost to serve them is much lower. The cost of risk is much lower. And the cost to actually, fund their loans, like I said, 78% of their overall revenue is also much lower. Where are we losing? That's the real question. This is why I love this business. Okay, a lot to show off here. Customers, like I said, has already gone above 80 million, but that was in April, which will be next quarter. But so far, you can see that the activity rates per, as we're adding on this many new customers, continues to climb, okay? Which is just unbelievable. And you can see, I just brought up a chart here that shows the longer term, because they're only showing off 5 quarters here, which is just right about here. If we actually look, it was all the way down at around 60 to 59.5% back here, and it has only climbed. It's only gone up over and over and over. Even on my chart here, it says 82% each. Whenever you actually zoom in, like they're showing here, it is still improving, even though the numbers are getting stronger and stronger. This helps with average revenue per user. This helps with churn rate. This helps with all these different things. It helps with purchase volume. It helps with reoccurring revenue. It helps with those organic referrals. All of this is unbelievable. It's unheard of in the industry. Speaking of average revenue per user, they show average revenue per active customer has just been climbing 30% year over year. I even show it off in a very longer term here, just from Q1 of 2020, the earliest statistics that we could get. The reason for why it was so high back then is because we only had credit card users, okay? Once we actually added on these, new accounts, the normal deposit accounts, it really brought down the average revenue per user because there was just so many new customers at the time. But now they were starting to get a blend of both depositors and credit card users. As you can tell, that average revenue per user continues to climb once again. And that's showing this unbelievable growth in revenues whenever you match, average revenue per user and the new customer growth. You're getting 87% growth year over year in revenue for a very big company, okay? This is not a small company. No company with 80 million users has a small market cap, but we'll talk about that later. As we're showing off all these new customers, new average revenues and everything, the cost to serve these customers has stayed stagnant. And actually, whenever we zoom out like what I'm showing here, it's actually gone way down. It used to be much higher. So they're actually getting more effective as they scale, which in banking is not normal. And then I've even shown off this extra line here, servicing profit margins, which is just showing the difference between the monthly average revenue per user. And then also to serve those customers, you're looking at a 10 to almost an 11x profit margin per customer whenever you're just showing off these two statistics. It's unbelievable. That's more than tripled than where we were just a couple years ago. Roughly about 3 years ago. So it's just been insane growth. Now, they just keep getting more efficient. You can see here, this is just from June 7th of 2023. So this hasn't even been factored into the numbers because this is the most recent quarter. They just said that there's a restructuring in the Brazilian operations where they've eliminated 296 positions. This is not firing people because they're doing bad things. These are positions that are now closing. So they're not looking to rehire for these positions. So even though that their headcount has climbed so much to handle growth, in the last quarter, it's actually dropped. I'm expecting an even further drop into the next quarter, which is only going to keep those costs down, going to keep those expenses lower, even though the average revenue per user is climbing and everything along these lines. They're just getting this efficient as they become more of a holistic style of business. Only getting better, I said. Average or active customers that are actually using the platform is already climbing to north of 40% in the first month of people even having this business, totaling 57% right now, where people get onto the platform and they want to make this their primary bank account. Another reason, as you can see here shown off, that people, just in this first little bit that they start to download the app, are already averaging about 3 products per customer instantaneously the second that they get the app, because there's so much more to offer, which is also leading to a spike in average revenue per user as we go on. But as you can see, the longer people have these apps, it even continues to climb. So, all these people that we're bringing on is actually lowering the average revenue per user. As those people start to age and those cohorts get longer, what they've even said is that the purchase volumes that people actually put through their debit and credit cards, because that's a big part of the business, is the interchange fees, that actually triples after you've been in the business for over 2 years. Very, very exciting. Now, this is exactly what I'm showing off here, right? The purchase volumes just continues to climb, as you can see right here. Purchase volumes for them has continued to climb. And just in this last quarter, the quarter that hasn't even been announced yet, they've shown off a couple of great partnerships. Nubank and Uber announced a unprecedented one-click payment through NuPay. Nubank reinforces the payments area and leverages NuPay method on iFood. eBanks, which deals with 1,600 different merchants and big ones too, like TikTok, Meta, Google, all these different users use eBanks, now will allow the Latin American users to also enable NuPay. Now, like I said here, they take a 1.15% take rate on all the purchases that go through. And obviously, with all these new partnerships that they continue to find each and every quarter, this should only continue to increase going forward. Now, these are not their only two products. Like I said, new accounts, their deposit accounts or credit cards. They've also gotten into invest products just in the last, little bit. Personal loans, insurance policies, business accounts, crypto. All of these things are also getting much more or, much greater attention just in the little bit. The new invest product actually has been growing like crazy. And the market for this in Latin America has gotten really big in the last couple of years. So I'm really looking forward to this being like their third biggest product. However, personal loans in terms of actual, money that's brought into the business is obviously a massive gainer. Credit cards being number 1, personal loans being number 2, then new accounts being number 3. However, new accounts probably the most important because it does help with the cost to fund all of these products through all the lending. That being said, like I said, total portfolio made up mainly of credit cards and personal loans. The growth has just been phenomenal over time, making up for 78% of overall income. Then, whenever we actually look at the risk of this overall business, you can tell that in the purple here, what they're showing off is the non-performing loans in these different income brackets. So you can see, less than 1 times minimum wage, 1 to 2 times minimum wage, and then over and over and over, you can tell how efficient they are in these lower brackets. Just in a little bit, they actually went above their default rates versus the incumbents in the high-end areas. That's really not where we're dealing for the most part. It is only 2% of their overall portfolio, as you can tell by this number right here. In their main areas, which is up here, they're absolutely dominating. Like, look at this 1 to 2 times minimum wage. How much the incumbents are spiking up in defaults where Nubank really hasn't been increasing versus their competitors. This is really where a lot of their profitability comes in. And then even looking at deposits, where we're funding a lot of those loans, the growth has been increasing like crazy. And then also, this is their cost of funding. They call it cost of funding versus CDI, which is like their interbank rates with the Central Bank of Brazil, okay? So about 100% means they kind of break even. They had a little bit of a take rate here, but they changed something in the way that they actually fund this. They made it sort of a 30-day delay before you actually make those payments to get interest on your deposit accounts. And that dropped the funding amounts by nearly 20%, okay? This is unbelievably, like, it's unprecedented that you're able to make small changes like this and get this much more profitable. That's leading to, you know, potentially some of the most profitable businesses in Latin America. Look at the net interest income and the net interest margins of over 15.7% in the last quarter. Like, find me businesses that are doing this, okay? That are growing this fast, that are having year-over-year changes of 138%. Much, much faster than the speed at which revenue is even growing. They're getting to become a much more profitable business. And yes, the macro is favoring that, but banks do very well in low interest environments as well. So I expect this to be even better going forward. Total growth overall, customers have grown 2.1 times over the last year, okay, or over the last 2 years. Revenue has grown 6.6 times. Gross profit 5.6 times, and they finally broke profitability, going just in the last 3 quarters from $7.8 million of profitability, $58 million, to $140, almost $142 million of profitability just in the last 3 quarters. Where are we going to be next quarter? You know, the profitability and the growth has just been insane. Insane. It cannot be overlooked. This is the most exciting business I've looked at in a while. Okay. This is where it gets really, really interesting. This is where everyone has to pay attention. Every statistic that I could possibly find showed off, and I was being conservative here. I saw ones at 0.06% churn rate. I saw some at 0.13%. The most conservative estimate that I could find was that the monthly churn rate was at 0.18%, okay? That means to fully churn out their current cohort of customers would take about 555 months, okay? With an average monthly revenue per user, not per active user, per every user, is about $6.82. Adding on to this, that their gross profit margin is nearly 60%. This would value their lifetime value per customer at $2,265 per user. Remember, I was trying to be as conservative as possible, okay? That being said, customer acquisition costs about $4.28, as conservative as possible. The lifetime value to CAC ratio was 529x. Guys, I looked up every metric I could find. A 5-to-1 is considered an A+++ client, okay? There's no SaaS or e-commerce or banking sector that does anywhere near this, okay? 529x is magnitudes larger than any other business would even remotely get near. Even the likes of Cash App, which Kathy Wood holds up as this amazing business, okay, does like not half of this, okay? Not even half. This is truly spectacular and something that I want to continue to monitor because, like I said, I was even being very conservative on the churn rate. As I was changing it to the 0.13, this number went up to 700%. This went up to like 780 months to churn, and unbelievable. I tried to be as conservative as possible. This growth is unbelievable, and it's only looking to continue. You know, we compare it right now to other banks. Nubank showed off $7.9 as average revenue per user. Today, it's actually $8.60, okay? And I wanted to compare it to this second bank that they showed off because the socioeconomic class was very similar. 8% high income, actually 42% middle income, and then actually 50% low income for Bank 2, which is lower than what Nubank has. You can tell that their average revenue per active user was closer to $42 per person. There's a ton of growth here. And I just added in here that they're starting to get into the more upper class products with like Ultravioleta, which is their sort of black card, which has seen a lot of growth lately. So hopefully these newer upper class style of products will bring them into the newer echelon of clients, which should raise that average revenue per user, which is only going to compound on all the lifetime values and hopefully even keep the customer acquisition costs down like they have before. Whenever this company IPO'd back in December of 2021, you had the likes of Warren Buffett leading the charge on this IPO with tons of different companies. Morgan Stanley, JP Morgan, SoftBank, Bailey Gifford, a bunch of companies. I can't even remember them all. There were so many. All of these institutions were in on this IPO that actually was valued at over $40 billion at the time of IPO, okay? Today's market cap is $37 billion at the time of recording this video. But yet, whenever we compare this to the statistics that were shown off at the time of recording versus what is actually, public today, and also Q2 is already over. They just haven't even presented it yet. So these numbers will be even larger. But customers, 48 million. Today it's 79 million. It's actually, we already know it's over 80 to 81 million customers. Products have practically doubled. Activity rates have gone up. Purchase volume has doubled. Deposits have doubled. Even the take rate on the purchase volume has gone up. This has led their net revenues to almost 4x during that time. Revenue per member has doubled. Revenue per product has doubled. Gross profit has nearly tripled. Okay. All of these insane statistics point to a very, very good outcome. Customer acquisition cost has stayed the same. Monthly average revenue has nearly doubled. This has led the customer to, average revenue per user ratio to practically double. Cost to serve has stayed the same. Interest earning portfolio has just grown like crazy. The company has only gotten significantly better through scaling. Doesn't seem to be slowing down at all. The growth is phenomenal. But yet the market cap is even lower than what it was whenever all the smartest investors in the world have invested. How can you not look at this company and think that things are looking extremely bright? Extremely, extremely bright. I just added this in as well, just to show that if, for example, you thought that, okay, well, like any other hyper growth stock, like a Snowflake or something, then maybe the stock-based compensation is out of whack. Aside from this X up here, which was above 20%, whenever they actually IPO'd, which is not uncommon, okay, they have to, give shares out to the public. That's what an IPO is. Aside from that, guys, the, overall stock-based compensation is below 4% right now in the last quarter because even the CEO completely cut off his $375 million stock-based compensation, cut it for the greater part of this business to just be more profitable, okay? Whenever you have management completely focused on the growth of this business, remember, it's not even 10 years old. This company is, although being very profitable, is not expecting to stay profitable. This growth is going to be unbelievably phenomenal, okay? I am looking forward to this company over the next 10 or 20 years, as I truly do believe this will be a top 2 or even the largest Latin American bank over the next 10 years. But that's it. This is the most exciting company that I've seen since Tesla. It's unbelievable. Thank you all for watching, but bye for now.